It's no surprise that Tesla closed in the red again today. Hi guys, thanks for joining me on Tesla. It's Mark, and the closing price for Tesla was $219.22. That's a $6.38 decline over yesterday's price, and in percentage terms, 2.83%. And I guess if you've been watching over the past couple of weeks, none of us here are surprised that this is happening. And we actually kept our little squiggly green line that we drew here some time ago last week, and it is essentially following the line to a T. So it is now the end of that line. It was essentially drawn to be to finish on the end of trading today on Thursday, by the way, which is August 17th, 2023. And so I don't have another prediction after this. We figured that if it was to fall, it would fall through both gaps. It was the larger gap here, marked in the green box, and there was a smaller gap here that was filled today. And not just filled today, but didn't provide much support, and just we fell right through that into this area here, which kind of makes sense. There was a little bit of activity here. It's really not that much historically. We figured that if we were to find any type of place to reverse, it would be a little bit lower. We were figuring in the next green box below, which kind of just lines up with the peaks of the consolidation here from spring. That was like the March timeframe. And we can actually add on the volume profile to kind of show you, and switch to the daily time frame to kind of show you that we were sitting in this profile, this volume valley, you could say. And we just fell really through this valley, and that kind of made sense. We kind of anticipated that if it wasn't going to find support above this gap, where there was some volume left in this profile, that it would fall pretty quickly. And what's quickly? It was a drop of almost 10% in a matter of 3 days, 4 days. So that quickly. And looking at the volume profile, we don't really see the shelf of this profile really form in a positive way for supporting price. Not until right here around $205, $206, but really solidly more at the 200, kind of that psychological level of just a nice round number for Tesla. Though if you were, well, let's kind of familiarize ourselves with our journey over the past three or so weeks. From the peak of price of our recent pricing, which was the day of earnings, we have now fallen 27%. And if you wanted to include after hours price action, which happens to be almost $3 down per share after hours, we're talking 27 and 3/4, right? So almost 28% has been shed from Tesla's share value over the course of 29 days, or basically a month now. And unfortunately, we really don't know if that's really going to be it. I think that with this type of action, there was a possibility that we could retrace pretty violently in a way that would probably get us into the consolidation range of spring, and not just really stop on the top of these peaks from that same range. What is the range? Like if we were to go from our closing price today, kind of into the green box, it would be around 4.5% of a drop. But if you really want to get a little bit more volume in this profile, maybe another 8%, 9% drop can kind of get you into an area that would pique a lot of people's interest. Now, that would be kind of sad, because if you look at our run up, we came from a very lowly low of around $152 a share, but we really broke out around 165. And if we were to get ourselves down to around $200 a share, that's really on, like, if you were holding through the entire run up, you're only realizing a gain of around 21% if you didn't sell at the top, which I did not sell anything. And that is in contrast to if our pricing would have held near 300, we would have realized that 80% gain. And if you bought at the very low, you would be holding up for about 96%, which would have been a fantastic trade for you if you're trading, that is. If you're holding, I understand that this would have been a great place to dollar cost average. Are you getting to that point where you're thinking about adding more shares? I do wonder if this is going to get to that point where you feel like you need to dip your toes in the water for a little bit more exposure to Tesla. But let's say we get into our little predicted green box. If this was to sell off, you would be realizing about a 38% gain if you bought from the lows here in spring. Now, before we get to the small amount of news and other details we would need to look at the internet for, is there other scenarios where you have large run-ups, okay, that have very large retracements? Well, let's take a look at the November 2020 run-up, where it was a little bit more than what we experienced. We experienced around, 97% in our run-up recently from the spring into the middle of summer. This was 120% back a couple of years ago. But what was the retracement down before you found yourself getting a little bit of support? Around 39, basically let's say 40%. Okay, let's just use that quick example of what 40% looks like. What does 40% look like from our peak? Well, 40% looks pretty drastic. It actually gets you to the bottom of these volume profile peaks, and it is essentially right before the volume just falls off again, which would be around the gap area from spring. So that would be $180 a share to see a similar 40% retracement from this rally. Now, what about the rally from January into spring? That retracement at the most was 30%. So 30% would be very close to kind of where we're at now. 30% would get you into the green box. So if we just do a similar retracement that was done just a couple months ago, that would be a 30% retracement into 200, let's say $210 a share, which can be easily accomplished by Monday or tomorrow, depending on how bad any particular news might be overnight, right? What about from all-time highs? Let's say if we were to pick an arbitrary point from all-time highs, which would be one of the lowest of lows, which would be here, and you get a move around 127%. What would the max retracement be? The max retracement would be, I would say that was relevant, would be around 43.87%. There was another down to 36% and another down to 30%. So 30% seems like a number that could be relevant in the near term. That 30% move took around 46 days. We're 29 days into our move now. So we're a little bit of a faster clip compared to spring. We're retracing faster than we did from all-time highs. And unfortunately, there's really, I don't know if the 30% retracement would be enough with this particular environment, but I guess we'll see. So let's move over to the browser to take a look at just some quick information on the old internet. And I think the first thing I want to do is look at is just some interesting news that came out from Bloomberg today, and Sawyer has a tweet about that. And Sawyer Merritt says, now Bloomberg's sources, quote unquote, are saying that the refreshed Model 3 could start production next month in China. The electric car maker is in its final stages of producing display vehicles, which will be shipped to Tesla showrooms later in August. Now, I think the whole sources and quotations is implications that Sawyer Merritt probably believes that Bloomberg is just using people posting on X or Twitter as a source or basically some inclination to write an article about the next Model 3, the Highland, coming out soon. Because there has been many posts, none that can be really validated, that the production line in Shanghai is switching over to full Model 3 Highland production basically this month in August. Okay, so let's go over to some economic news. And there was a little bit of some data drops today. Initial jobless claims came in just slightly under expectation. The Philadelphia Fed Manufacturing Surveys is showing that industrial areas and manufacturing are doing still kind of okay. I think that's been the running trend for a couple months. U.S. leading economic indicators showed 0.4%, though that is still a decline for 16 months straight. So here's an article from Yahoo Finance showing that for the 16th straight month in July, the pace declined slower, yes, but it still has declined 16 months in a row. So typically in these type of scenarios, leading economic indicators falling for this amount of time has always led to a recession. But general consensus right now is there is no recession coming due to inflation falling quicker than anticipated and jobs being still very plentiful, and the labor market being rather tight. So we don't really know, right? I mean, I think all we care about is Tesla's going down a lot, and there's really no news to really support it. People, I just want to clarify. There is a lot of stories like Sawyer's stories, and Sawyer always has some great posts about all the cool things that are happening in Tesla land. People, maybe our OEM competitors in America are having to face against UAW negotiations for contracts for all these workers in the OEM legacy car industry. He has some information about, there was a LinkedIn post about and a job listing about a potential rental business being launched in Texas. I don't know what that means, but the reality is this is all really great. And if you are a big Tesla fan, you love reading news about really cool things about what's happening in Tesla world. But unfortunately, these type of pieces of news, or any type of news that's happened in the past couple of weeks, those are not, they're not material. They're not relevant when it comes to the price action of the stock. It doesn't help your stock go up. And I hope you guys can understand that that doesn't really mean anything when it comes to increasing the value of Tesla shares. What really increases the value of Tesla shares is the company making more money, and when there are price cuts, when there is maybe some signals of demand waning for certain product lines in Tesla's offerings, it is just going to weigh negatively on the stock. And to have material news that's going to boost the share price, it really has to revolve around, okay, if we're not selling cars at higher prices, where are we getting more money from? Is there a services thing is there a software thing that we can start monetizing further? Is there FSD getting to the point where a wide release is going to be available due to what maybe being accepted by new jurisdictions overseas? Or in America, full self-driving being available and then being improved by the government regulatory bodies that would be overseeing something like that. Those are the things that would help in the very short term. And of course, with the release of Cybertruck and pricing for that. And we have literally no clarity about anything that you guys talk about or think about when it comes to the future, even the near future of Tesla and their new products. So tomorrow's going to be a big deal because it's going to be the options expiration day for the month of August. And so I do want to look at not just Tesla's options activity, but also the S&P 500, just because there's just more interest and there's more activity in the index ETFs. So there's a good amount of options. It's kind of settling around $440 a share for the SPY, which is currently at $435 in 82 cents. It might be a little bit lower after hours, and we'll check that out later. But you can kind of see as well that there are, just based off the open interest portion of this chart on MaximumPain.com, that there's a lot of puts. I mean, there's a lot of put open interest. Not necessarily volume, but a lot of put open interest to the point where the put call ratio for options expiring tomorrow, that interest was basically a 2-to-1, where there is almost 2.9 or 2.8 million open interest. I'm sorry, 1.4 million open interest on calls, 2.8 on puts, total 4.27 million. And as far as the volume, which I usually look at more, you can still see just based off the red line here. Underneath the red line, there looks to be a lot more puts anyways, even in volume. And but there's a lot of calls and puts kind of coalescing on this 440 strike. That 440 strike, though, it would be about $4 a share or 1% lower than what the current price is. So is there implications that there's some bullishness that it would kind of see pricing be around the $440 or just a little bit over 440 tomorrow? I'm not totally sure about that. It looks like if you're looking at this profile, you probably want to put pricing at the most at 439. It will basically, all these puts wouldn't get paid out, and only some of the calls get paid out, because that's just, as you can see in the curve here, there's a lot more calls over the 440. You probably want to, if you're a market maker, I guess you'd love to see pricing end up around 439. Max Pain based off open interest is a 437. So I guess that kind of lines up. A 437 though you would have to contend it would be higher or lower than 437 because there's a lot of puts there as well. From the open interest, 430 has a lot of open interest for puts. I mean, this is probably a lot of people starting to want to hedge. We're going to see, right? Well, I guess we'll find out. Let's look at Tesla. That's what we do here. And Tesla's open interest we don't really look at this just because it's really all over the place, and you can see lingering effects from from the earnings plays that people are out over here from anywhere from $300 to $385 in their calls. I'm sorry guys if that's one of you guys. Just looking at the volume did pick up a little bit, and it just kind of rivals even index ETF volume, where there's a lot of interest for the bulls at 225. And as you saw, 225 was actually basically a strong resistance during the course of the day. And I think that kind of reflects the positioning of people that are selling options. They don't want to see 225. And there's also a strong peak at 230, and there's a good amount still at 227. When it comes to people who wanted to short, they're actually already in the money. This peak at 220 was pretty strong throughout the day, but as I know, we are below that. We're around $217.50, I believe, in after hours trading. So that's all in the money, and I don't think there's really much for them to worry about as long as we keep selling like this. All these puts are going to get paid out, and we're talking to the tune of 175,000. We do know as well that these start picking up like crazy on the day of expiration. So track this tomorrow and see if there's any development or evolution from the 220 puts being around 175,000. Try to keep that in mind. And the 225 calls being 182,000. Just kind of understand that this, even though this is, it seems relevant to the price action today, this could really change tomorrow and affect where the price is going to end up. If you start seeing puts piling up around 215, that's going to be really problematic for the stock. And if you see calls being piled up at 220 due to the context of our price action being very, very bearish, if there's a lot of calls developing at 220, I would say that would provide reason to keep price below 220 instead of actually going above 220. Usually we just look very bearish on expirations lately, unfortunately. It's just the way it is. So let's go back to the charts and take a look at why things happened the way they did. Now, I want to take a look at the US 500, which is, this US 500 is going to be the, it's basically, it acts like a futures ticker for the S&P 500. Now, during the course of the after hours trading yesterday and the overnight futures trading and the pre-market trading, the stock market looked pretty bullish. Okay, so it made this kind of low here, and this low was from the Chinese and Japanese markets open. They opened kind of bearish, but recovered during the course of the night. And as the very late night went on into the pre-market trading, the market looked very, very bullish. I mean, to the point where at some points it was like 0.3% up, and this was around here. But you found some really ironic resistance there. I don't think it's at a level that's really important all that much, but you can kind of tell if you were looking at this price action, they're setting up for a really big short. And the reason for that is this was like just straight manipulation. Some people that were short might have been sweating this. It's just that when the market makers need people to get out of their shorts, there's only one way to do it. It's to really get pricing to go up before the open and to just get you to get out before any more pain happens. And if you're watching this live, and I was watching this live for some hours of the night and in the morning, you can tell there is a real determination by the market to really get some type of gap up open, which they did accomplish, and they defended it the whole entire time to make it look rather bullish as well, as far even as a pattern goes. But if you were watching what really mattered, you knew this was going to be a short. Unfortunately, I mean, oddly enough, Tesla was not participating in any of this pre-market action or post-market action. The overnight on the 24-hour trading in Robinhood, Tesla never looked good. So, I mean, yeah, it's not a great trade if you're bullish. So let's take a look at what really mattered over the same amount of time. And it's a 10-year yields. And we've been talking about yields for a couple of days because the yields are really just getting out of control. Now, something that makes sense is that when yields go up, and this is from earlier this week, okay, yields went up a lot, and of course the stock market generally trended down. Makes sense. But what about yesterday and overnight into the morning when the yield still went up? The market was going up. Okay, and we know that it went up 0.3%. And then once the reality set in over the course of the day, it did sell off. Yields came back down a little bit, got bought up back a little bit. But generally, if the yields are going up this strongly in the face of a market rally, you kind of know that what's going to happen is they're gonna basically sell their positions in the market. When the yields come back down, they'll buy themselves some risk-free assets. I that says a lot. I mean, it says a lot. They're willing to buy their bonds at slightly less yields to just get out of the stock market. And the stock market is typically is very, very weak into August. And I know there's some seasonality that goes in favor of Tesla, and that could be because like maybe around Q3 there's just news and releases that help Tesla in specific. But typically the market is just generally very weak in August. And that's really, it's not even really a market thing sometimes. It's just that money managers, fund managers, people on Wall Street are just, they're not there in the office, they're on vacation. And you just have computers, algorithms, and interns running their books all day long. So watching the yields, you would know that open was going to be sold off immediately. It was completely sold off, especially for Tesla. And yeah, I mean, that's something you guys need to watch for now, because if yields peak, I would say above 4.4%, I think it's just basically over. I don't know how you recover even. I think you would just need around a month to really recover in the markets, and some type of good news, some catalyst at the end of this month, maybe some type of inflation data that comes in that looks very, very good, and that will really control the yield and get things like TLT and rate sensitive stocks back up and moving up as well. That could coincide with Nvidia's earnings report, which is towards the end of this month. So I think what's going to happen is you're just going to kind of have a really poor price action if you're a bull until the end of the month at the soonest. And who knows what those pieces of data really look like. We don't know if inflation is going to go down, and we don't know if Nvidia is going to do really good to help bolster the strength of AI and tech stocks in general. So we can also see what really dragged down the market too. I think we know Apple. We talked about Apple too. That Apple was really testing this line. We talked about this as a brief note before closing a video this week, that once this falls through, this could easily drag down the market. Now I do know that SPY and S&P 500 kind of acted decently at first, even with the Apple selling off. But this is pretty normal for Apple. Apple fell around 2.3% for the day. And that's normal for dividends. When dividends are issued, it kind of falls that way, but it doesn't help when the market is already looking like it's a sell. It just lines up pretty badly. You can see some other moments in time where, when those dividends are issued, that Apple just has, and this goes for any dividend stock, it just kind of sells off a little bit, and that's normal. It just doesn't help the price action, unfortunately, right? So where does Apple stop though? We really don't know. I mean, Apple hasn't had really good earnings really for 3 quarters now. So for a year, they haven't been increasing sales. They haven't been making more money really. So it's a justification of Apple at $173 a share. I don't know. I think a lot of people would probably see Apple back to the 150s area before they really want to buy. And you can see some pretty violent retracements on Apple. Even though Apple is a mainstay, it does have some brisk sells, and these are steep selling you can see it again. Retracements for Apple from these all-time highs were somewhere from 15 to 27, 28%, and currently Apple's retracement from its all-time high is only 12.5%. So at the minimum, a 15% move puts you at around 268. And what does 20% look like? 20% could look like 160. So yeah, you might have to kind of put this into your calculation when these large cap stocks, mega cap stocks, especially in the tech world, are just dragging everything down with it. We saw big moves down in the likes of Meta. Microsoft has been very weak as well. Nvidia's really doing its best to try to hold up the entire market. It's not doing a good job of it because it's no Apple. But the prospects for Nvidia do look very good. So let's go back to Tesla. We'll turn off the volume profile, and what we want to do is go back to we're on the daily, perfect. So we're on the daily time frame, and what we want to do is just kind of look at the different moving averages. We talked about that yesterday, where if we were to fill the gap, we would probably be in an area of interest where it kind of meets our last moving average, and we'll just double check that right now. Let's look at the EMAs, and yeah, there we go. So we're actually now trading below all our moving averages. We were right that at the gap was our last bastion of hope to find support, which was the 200 EMA. We fell right through that. So the moving averages just don't matter. But we also talked about this too. When it does fall through 50s and 100s, it probably just falls right through the rest of them as well. And you can see that as we fall through the first three, it's nonstop. Even if we fall through the first two on the shorter time frame, it's all a sell. And it can stay oversold and can stay below even short-term moving averages for very long periods of time, and just as much as it can stay above it, like we recently did. We stayed above for a very long time. We can stay below for a very long time. And if you look at Tesla's price action, it doesn't really find great support at moving averages because it moves so fast and so violently that it's only a suggestion of what price action is going to do. And reclaiming them is always great for the bullishness, but who knows when we are going to reclaim it. Could it be done pretty quickly? It can be done, sure, in a couple of days, but the news would have to overcome a lot of the weakness in the Asian markets to see any bounce at all. Let's take a look at the simple moving average, and we'll turn off EMA, and let's look at the SMA. So SMA, we're basically we're at the 100, but we've closed below it. And next we have the 200 at $196 a share. So if we were to find ourselves on the 200 SMA, that would be an 11% drop. Now, there have been times where the 200 has acted as support, and you can see it through here in the before we fell through it on the inflation report last year in April, and you can see how we kind of found that was our bounce in this this is after Jackson Hole. So it kind of found itself at the 200 after Jackson Hole. It kind of bounced, and then of course sold off with the whole Twitter situation. But that's going to be our last bastion of hope, that we can kind of settle here and maybe bounce there. Otherwise, we'll see ourselves at 195 in pretty short order. When it falls through the 100, it can get to the, oh man, how fast can it get in historical price performance? Getting down to the 200, it can get there in like a week. It can get there super quick. But usually when it does fall through, it sells off very hard, and it doesn't necessarily provide the support. Look, it always seems to provide the initial support. There's a bounce, but it still gets sold off. So could that happen again? Maybe. They would have to see green tomorrow, but it would take some really, really good news out of China to see some green tomorrow. Look, we're already $2 down per share after hours, which is just 0.9%. That's not a good look because the S&P 500 is only down a quarter. Okay, so yeah, I mean, Tesla just is not doing all that great. So we can turn off the moving averages and understand that what's our next target going to be. Let's draw it out and kind of predict that, it looks pretty bearish, but maybe there could be some type of great, more stimulus news coming out of China, maybe, right? And we can maybe bounce around here. Let's see. Let's take our little brush and draw what that could look like into next week. So, I say we dip more in the morning before we find support, and it just looks kind of like maybe like that. And it would be like a methodical march up into next week. And that would be maybe the best case scenario, perhaps. And I know that doesn't sound that great. I mean, that move doesn't seem that much. By Monday, maybe be up 2%, maybe. What about some really bearish stuff? And we've been pretty bearish anyway, so it wouldn't be all that surprising if we were to sell. I would like to see a bounce at 211. Oops, let's say that. Let's delete this straight line. Let's go down to 211 and bounce off that. Okay, so we'll see. But what I want you guys to do tomorrow is, number one, overnight, if you're really interested in trying to get a good trade on the market or in Tesla, just watch yields. Yields will be really important. You can watch the Japanese yen to see if there's any intervention on their part, as their currency still remains very, very weak in light of their lack of desire to increase interest rates. You can watch the Chinese market open. You can watch the futures on both Asian markets, Nikkei and HSI. You can watch the CSI, which is more like a mainland China stock market instead of like the Hong Kong based tech heavy kind of stuff. That is usually a little bit less volatile, the CSI. But yields are going to be really important in the short term. And the Chinese market and the Asian markets in general can really drive sentiment further bearish. And if that's the case, the selling will continue. If you see any strong stimulus in the Chinese market, you could get a small bounce with that. But remember, the idea of stimulus, it's cool and all, but it also signals to the rest of the world that something's desperately wrong. And even though we know it, it would mean a lot for the Chinese government to really accept, to show that they really accept that what they've been doing has really not been effective at all. And there was one little piece of information I wanted to show before I ended the video, and that's something related to the Chinese the market in general. And I haven't had a chance to read any news on it, but let's switch over to the browser real quick, and we'll just end the video with that. So, a couple of minutes ago, news came out that China's Evergrande, which is a really big developer, who, as you probably know if you follow the Chinese market, Evergrande hasn't been paying their foreign note holders. They have basically there's properties that are not being developed that have been paid for by citizens in China. There are properties that are not going to go finish. They're just basically have no cash to even finish those properties in the first place. There just is no money for these big developers in China. So it says here in the CNN article, China's Evergrande Group filed for bankruptcy in New York on Thursday. The company was once China's second largest property developer by sales, but the firm borrowed heavily and defaulted instead in 2021. And this is sparking the ongoing property crisis in the country. Okay, so basically, it still doesn't really look good. And there's what's called like shadow banks that are doing very, very bad in the Chinese market as well. So kind of read up on that if you just want to kill some time and better familiarize yourself with what is really holding back not just Tesla, but the rest of the stock market. So, all right, guys, thanks so much for listening. And we can, once again, just hope for something better tomorrow. Stay hedge, folks. Bye.